Okay, this is Matt Shaw, Chief Analyst, Knightsbridge Trading Academy. This is training video number 21. Reduce risk, cut risk, and then make profit. Okay, what I want to get clear in this video today is just simply one or two examples of trades that I've done and how we look to obviously start a trade with a stop loss, move that stop loss up, and then eventually either cut the trade or put the stop loss into positive territory. Now, what I've done here, I'm going to actually place a trade in a second as well. I'm going to actually sell this dollar chief. I'm going to close this out and maybe take a sell because I think we'll retrace about 10 or 20 pips. It's a nice counter trade here. If you look on a 4-hour, daily, I am fancying this kind of neckline to be some kind of resistance in the next few hours. If we break this, oh god, we can rally another 200, 300 pips. It's a great little buy if we break this neckline. Again, as I say, always look to the daily for these types of potential reversals, as seen in a few videos ago. But it's a great neckline here. Big sell-off down below here, action trying to get back above. We've now got here perfectly on this line, 97.90, right on it, and it's come up against some stiff resistance. Over the last 2 hours or so, it's really, again, you can see here, it's a 4-hour chart. If we go back to a 30-minute, you can see that, you know, it's spent the last candle, spent the third candle now, it's spent trying to get through this level, and it's sort of failing. So I'm looking to maybe sell this actually and close out here. Yeah, do you know what? I'll close this and go short. So what we were, I'm going to go 1.5. I'm going to go just one actually, just short. Now, what I did was, now if I got in here just around here on dollar Swiss. Just as it crossed up through the moving averages. Now, just around 97.40, 42. So I got in here after the cross. We saw moving averages cross up through quite a few candles. We had this attempt at a low here. So remember the engulfing candles. So let me just zoom in a second. Remember, so we tried to make a low. We bounced off this low. We made some of the candle back up in the same 30-minute period. The candle engulfed, and then we had a little small down one, but then again, up candle, and the moving averages converged, crossed over to the upside, and then created. So I got in and around here. I got in about here, just over 40, right there. Okay. For the third candle above the moving average. Now let's just zoom out a second. That's where I got in, right about there. Now let's put a little arrow there. That's where I got in. Now stop loss, again, 2 lots. Okay, 2 lots, 2% maximum risk. Now 2 lots is roughly on dollar Swiss about $15, $16 a point per point. That's why we made, you know, so $750 on that, made just over sort of 45, 50 pips. Now, $15, $16 a lot, so we have a 30 pip stop loss. This was a manual stop loss. I didn't enter it. I was just assessing this, and I've just let it run. I checked it through the night. Now 30 pip stop loss. Actually, I did have it through the night, but I took it off today because I wanted to manually ride it up. 30 pip stop loss, $15, $16 a point. That's $450, $460, 460 pounds actually of risk. Now on a 27,000 account, that's just over 2%. Now, just over 2%, that's fine. So 30 pip, so 97.40 where I got in. Let's just do the line there, just there, and then 30 pip stop, 97.10 right there. So literally there. I'm going back to previous lows. Now, Some people would want to go below the previous lows for their stop loss. I used to do it, but to be honest with you, if it's already established a good firm low, we've assessed why we see the turnaround, this could potentially be a good swing trade. We've seen the turnaround and we've pushed higher above the moving averages. Candles have kept that confluence, and they've kept pushing higher. So you shouldn't really want to have to put your stop loss below the previous lows. If you're happy with your risk, total risk here is just over 2%. Remember, I never trade more than 3% maximum, normally 1%, and I don't suggest you go over even 0.5% starting out, as I said before. So 30 pips stop loss here. Now, as the market went on and carried on, just carried on, meandered, didn't really do nothing. It was 5 pips in profit, back to break even, 5 pips, 10 pips, came up, but then earlier today, the market carried on and on and on. Now, it was at this point when I get 20 pips in profit from 40 up to 60. So when I get 20 pips in profit to 60, I'm going to put a deeper line there. So we're right there, deep line. There's 60. We get to 60. Now our stop loss is here at 10. We move that baby up. Now we move that up to just 10 below. We still got 30 pips, so we go all the way to 30. Now the worst thing that can happen here is once it's at 60, the market sells off 30 pips and we lose 10 because we've got in at 40. I mean, I know it was just over 40 I got in, but let's say 40 exactly. 30, so 10, difference of 10. So you're going to lose 10 pips. Now, my total risk now is 2 lots, roughly $15, $16 a lot per point in pounds. Obviously, that's a bit less. So a maximum of 320 on a 27,000 account. So right now we've pretty much nearly halved our risk. Okay, and that's dollars as well, so in pounds it's even less again, so it's pretty much half the risk. So pretty much we could just let this run now, but for me, I like to get into profit. And today, although it was manual, just for the sake of the video, I took the stop loss off. Now I had the stop loss running as close as 75, okay? Now, again, when we moved up to here, market moved up to another 10 points, we move up another 10 points. So we get to 80, sorry, we get to 70. So once we get to 70 from 60, this is when you pretty much move the same as above, so below. So you move your stop loss to break even. Right there. So we're at 30. Let's move that up. Do you know what? MetaTrader's been an absolute nightmare today. Well, anyway, do you know what? We'll pretend we moved that up. This is an absolute outrage. We'll move this up to break even. So you get the point. So you're moving up 10 right there. That's what we'll do. So we've moved up right there. Now, our entry is our stop loss. So thick line. Thick line up top is current price. Thick line down the bottom is stop loss. And pretty much in between is where you let things roll. So the market's now 70, you have 30 pips in profit and you've got break even. So you've got zero risk now. So even though you have 30 pips, what you can do is close out, or you could even just let it run. Now sometimes when people get 20, 30 pips into profit, they like to close at half the position. So I had a feeling we were going to test 98, and we nearly did, so I let it run. Now, you could have laid off half here and kept the half run. I've mentioned this before. That's absolutely fine. But over the course of the time, if you your inner instinct is correct and the market does go on and go further, you'll end up giving away a lot of profit instead of just banking the whole amount at a slightly higher level. And I know a lot of people who bank half, the market goes on, they've done very well on the first half, and then it ends up coming back and stops them out. So they wish they'd really closed all the trade out, or indeed carried on the trade. So we go again up to 80, you then get the gist, we raise the stop loss to 50. And every 10, you raise it 10. And it could just be manual, but if the market's moving quick and you haven't got time to actually physically do it, just keep it in your head. And then eventually, when it gets so to the point of your target, in this case 98, you know what I wanted to do? And I pretty much moved it right to 75. So I got to the point where I was trailing the price here by 15 pips. So I actually had my stop at one point just about here where the current price was. I was 15 pips away from the current price, and this is where I had my stop at 75. So the worst that could have happened, no matter what could happen earlier on, the worst that was going to happen, from 40 to 75, I was going to make 35 pips profit. So I was on a 50 pip profit. The market rallied from 40 right here all the way up to 90, 91, so 92. If I was to get out, it would give me 90 as a sell price, so that would be perfect. So from 40, close out at 90, that's 50 pips. However, I was still in the trade. The market could have gone even further, because as we saw by the neckline on the daily chart, this could go on another 100 pips. So what I did, I thought, you know what, if it's going to break it, going to break the neckline, simply let it do it. It's going to do it. If it doesn't, if it hangs about and comes back off, well, at least I've only given away 15 pips. I've still banked 35 pips profit from 40 to 75. That's 35 pips profit. Okay, as it was, it didn't really want to do anything, and I thought, you know what, we're probably going to see some downside here. We are going to pull off. Why wait? I'll bank it. In this case, I've actually gone short because I think it might come off 10 pips, and I'll close out the short. I'm not short Dollar Chief, I'm actually more long, but I'll just get a quick trade in there. But I am overall long. I'll probably get in long again tonight or tomorrow. And then, so basically, I closed out, didn't give back anything. I thought I'd close out right on resistance as well. Why give back 15 pips? But if I wanted to leave it, walk away, I was going on holiday tonight, or I was just going out to the pub, whatever. I'd still have the prices on my phone, but it doesn't matter. I'd simply let it run. Put my stop in there, knowing I'm guaranteed 35 pips of profit. I've got 15 pip gap, quite a lot, quite a decent gap, and this could go on and maybe make me more. And I'll come home later, and the market could be over 98, and I'll close out then. But I've still got my profit at my stop at 75. I moved it up. Every time it moved 20 pips, I moved up 20 pips. But as soon as I got 40, 50 pips in profit, again, I then went closer to the price. I didn't just move up my stop another 5 or 10 or 15. I moved up another whole 20, 25 pips just to literally get it as close to the price as possible, because that was what I would have been happy with getting out of the trade. Okay, so pretty much bear that in mind. You can follow the price. This is where I was reducing the risk by just having a stop loss in the first place. Just down here, we reduced that risk more by cutting it pretty much to nil when we got to 30 and 40. We cut it there, and of course, one more push up, you literally make profit. So it goes in threes. You literally have your risk, you've done your analysis, it's as risk averse as possible to start with because you've done your analysis, you get in for the right reasons, you're following momentum, so your risk is low anyway. Any sign of the first whip up, the first leg, yes, reduce it, raise your stop, very minimal or close to break even. The next leg up, you literally get your stop into profit as soon as possible, or just at break even or just above break even. And then when you've made that very good profit, get your stop up on the next proper third leg as close to the price. Don't go like 5 pips away, but maybe 15 pips away, 10 pips away, but make sure you're locking in a good 20 to 30 pips. And give the market some space just to adjust itself. It may want to come off 5-6 pips before it legs up again, so don't go just 5-6 pips away. With spread as well, you'll get stopped out pretty quick. So give yourself at least 15 pips. I gave myself just over 17 pips, 18 pips, because it was 93 at one point. So I thought 75, I'd be happy with that. If it came back off, I still wouldn't mind. I'd be happy, happy, happy. I wouldn't be kicking myself. But I'm giving it the chance to break through 98. I gave it long enough, guys. I gave it over nearly an hour, so I kind of got out now. I've gone short. I'm going to go short for maybe an hour itself or 2 hours, and then I'll get out and look to go long later on, maybe first thing tomorrow. All right, thank you very much. On to the next one.